Everyone's talking about Bitcoin, IBIT, Bitcoin ETF, MicroStrategy, and miners like Marathon and RIOT. The same story repeats. Buy Bitcoin, grab a piece of an ETF, jump into miners, or follow big holders like MicroStrategy. But what if I told you there's a smarter way to play the Bitcoin boom, one that doesn't involve buying these obvious stocks? Today, I'm going to reveal a secret play that could outperform all the obvious bets, a strategy most investors are completely missing. Stick around because this isn't just about crypto. It's about capturing a unique opportunity in the perfect environment. Deregulation, pro-business policies, and a thriving market brought on by Trumponomics in the coming years. And the best part, the smart play here, is Robinhood, ticker HOOD, an opportunity almost everyone is overlooking. And now let's start with the obvious plays, the predictable paths that everyone's already familiar with. First, buying Bitcoin directly makes sense. It's the poster child for digital wealth with big gains and mainstream acceptance. But it's also highly volatile with price swings that can leave investors nervous. Then we have Bitcoin ETFs. They're safe, regulated, and they provide exposure without the hassle of wallets and keys. But let's be real. They track Bitcoin and they move when Bitcoin moves. Same risks, fewer rewards. Next, we have mining companies like RIOT Blockchain or Marathon Digital Holdings. They have high operational risks, fluctuating energy costs, and often disappoint during Bitcoin bull cycles with stock offerings that keep prices down. Ultimately, they're tied to Bitcoin's boom bust cycle. And lastly, there's MicroStrategy. It's practically synonymous with Bitcoin these days, holding billions of dollars in BTC. But once again, it's all about Bitcoin. If Bitcoin stumbles, so does MicroStrategy. All of these plays are obvious, straightforward, and most importantly, limited in their exposure. So where does that leave us? It leaves us with a bet on an underdog, Robinhood, the very company that everyone knows, but no one is thinking about in the context of the Bitcoin boom and Trumponomics. Robinhood is in a position to capture the value of both the crypto wave and the growing market activity without being solely dependent on the success or failure of Bitcoin. Think about it. Robinhood wins whether Bitcoin moves up, down, or if the altcoin season starts. Now let's talk about Robinhood's crypto side. It's not just a trading app anymore. It has fully embraced the crypto world. And here's the kicker. When the price of Bitcoin goes up, people flock to trade. Volume explodes, and Robinhood collects fees on every single transaction. If Bitcoin goes down, what happens? Well, people sell, and Robinhood still collects fees. They are positioned to profit from market activity, not just market direction. And this brings us to the real advantage, diversification. Unlike miners or Bitcoin ETFs, Robinhood is not just about crypto. The platform also captures a massive segment of the traditional retail investing space, stocks, ETFs, options, and even now expanding into advisory services. Robinhood's revenue doesn't rely on a single asset class. This means when Bitcoin inevitably faces its ups and downs, Robinhood has a cushion backed by millions of users trading in multiple markets. They recently reported a year-over-year growth of 89% in assets under custody, which means not only are people using Robinhood, they're also entrusting more of their assets to the platform. This stickiness is a powerful growth driver that's often overlooked. Now let's bring in Trumponomics. What does the new wave of pro-business policies mean for Robinhood? Simply put, growth. Trumponomics means tax cuts, deregulation, and policies that encourage individuals to invest more in the markets. It creates a fertile ground for retail trading to thrive. And where do young, digitally native traders go? They go to Robinhood. Robinhood's platform is uniquely positioned to benefit from the optimism and market activity that these policies encourage. Additionally, the focus on deregulation and financial innovation plays directly into Robinhood's hands, especially as they continue to expand their crypto offerings. In a world where regulators are softening on digital assets, platforms like Robinhood become not just viable, but prime destinations for new retail investors. But let's not forget, Robinhood isn't just keeping its ambitions within U.S. borders. There are international plans at play. They're expanding to Europe, and plans are underway for Asia next year. Imagine Robinhood capturing the wave of global crypto adoption fueled by a favorable regulatory environment. This means more users, more transactions, more assets under custody, and ultimately more revenue that doesn't hinge on a single country or a single cryptocurrency. Robinhood's next evolution involves multiple tailwinds. Besides benefiting from Bitcoin adoption and the retail boom sparked by Trumponomics, Robinhood is also riding the momentum from expanding services such as AI-powered financial advice and the advanced Robinhood Legend platform designed for active traders. Furthermore, recent announcements of expanding into the sports betting market and plans for international growth in Europe and Asia are significant drivers for its future growth. Robinhood is capturing new market segments, expanding internationally, and diversifying their revenue in a way that's resilient to market shifts. Plus, Robinhood's management is among the most growth-hungry in the industry, driving ambitious expansions and seeking opportunities beyond traditional finance. Here's the bottom line. The obvious plays like Bitcoin, miners, and MicroStrategy come with direct risks tied to Bitcoin's performance. Robinhood is the underdog that gives you indirect exposure with big advantages. It's a diversified bet on Bitcoin's volatility, retail growth, and Trumponomics. If you found this interesting, make sure to like, subscribe, and comment below. Let me know. Do you think Robinhood could be the ultimate play for the Bitcoin boom and Trump's second term?